G'day there. Welcome to the closing bell on the 8th of March for me. And today I just wanted to sort of point out, I guess, the conundrum of the markets at the moment and some of the reasoning, I guess, why I'm not sticking my neck too far out either way on what can be coming next because of this very interesting dynamic that is going on in the market. So I thought it'd be best to just, lay it out for us and give you a sense of why I'm happily sort of bullish and allowing markets to do what they're doing. But in the back of my mind, prepared, I guess, down the track for the music to stop, depending on what rates do going forward. But there is this, underlying bullishness of this AI story, which is building and building. So I wanted to touch on all of that to give you this overall sense of why it's a pretty tricky market. Whether you'd be completely 100% bullish or 100% bearish, I think would be a mistake. I think markets really can do anything from here. They really can all of a sudden blast off for a multi-year rally if AI really starts to take hold. But also where rates are right now is a bit of a danger. So, it's quite an interesting situation. So, just to start off, I wanted to show you the 2-year bond yield, which I think is a great sort of, outline of what rates in general are doing. This is over, decades, and we've got the S&P 500 here. Look at that massive rally, incredible. And just pointing out those last few times, where you've got that a big rate rise going on, then you've got rates staying at an elevated level for quite a while, and looking at what happens in stocks. So again, rates elevated, going along, and the trend goes down. Why is that? Because something's broken and stocks are getting pounded. So often, very often, that's the situation. Rates going up here into 18, turns down, and really we had years of sideways motion. And that was actually the crash, 2020 crash, which on a monthly basis obviously closed stronger. That's why the chart looks like that. But usually elevated rates in a short amount of time, after you've had it happen for decades, that's been a time to tread carefully, hasn't it? And if we're looking at really what's happened over and over, and this is where we're at, these rates, elevated level, holding there, way above the last cycle, really back at points where it was in this period, 2000 and 2007. It's all the way up there. And yet US stocks are going vertical at the moment, aren't they? So this is where my macroeconomic hat says, well, if I was to take a bet on what's coming, I'd be saying things are getting a bit overstretched, and that really you're going to see something like that, which is a false break of the high from a couple of years ago. So the rally can go on for another few months, and then something breaks with the high rates. Let's say inflation picks up again. Rates even have to go higher. I mean, we haven't got that as a, definitely not happening. So, something happens and conditions are ripe, as they have been in the past, for a period of either sideways or negative price action in stocks. So that would be, my favorite. That would be the story I would be telling you every week would be saying, watch out, wait for this stock market to find the selling pressure. It could be a few months in advance, or 3-6 months. We could keep rallying, but we're going to hit a wall, and that is going to be our future. So tread carefully from here on in. That would be my story. But when you look at NVIDIA and you ask yourself, well, is there something going on here that is bigger than even where rates have taken the market over the past period? And perhaps this paradigm shift is worth really considering. And, going from what, and I'll have to change that scale, from $100 to $1,000, and really going vertical. And that's based on, revenues coming through, and the reality of this being quite a huge technological shift that is occurring. If we really are on that train, saying that this is pretty huge and it's going to filter out through the economy, the big stocks probably first, have a lot of fat to cut, where they could, sack a lot of people, bring in AI to take up the slack, make people more efficient in the roles they're doing. When does this really start filtering through? When do the margins start creeping up in businesses that you wouldn't have expected? Why can't the supermarkets or the airlines or the banks all of a sudden have really increased their margins just through AI adoption? That could be really what's going on. So when you're looking at stocks in general, that's when I'm starting to ask myself, well, if I have a look at this, usually I would be saying, get ready. And this is why I've got those lines up there. They're basically, I'm just looking at, this down wave from the last few years, and I'm looking at the level 25% above that and the 618 above. That's just often where the resistance comes in. Even if it's going up, you'd often see a lot of work done up in this area. And that probably still will be the case. I think that's probably the favorite, is that you're eventually going to see, a bit of resistance up around this area. But, thinking of this whole AI story, and, you'll know I turned bullish when that long-term uptrend is up. We've broken out to new highs. Well, why isn't this breakout something like what we've seen in the past of a multi-year move? That could be on the cards. The state of charts right now is not telling you that's not going to happen. The state of the charts is a breakout, trending strongly, bars marching higher. So you've got to be going with it. You can't just be standing in front of it and saying, oh, I think it's got to sell off soon. You'd soon be carried out on a stretcher if you traded like that. So, what I'd need to see is a real reversal, down the track. And then I can start saying, okay, well, we've got to watch out here. But for the moment, with that huge paradigm shift and where stocks are right now, is like, well, you've got to be open-minded that this could surprise to the upside currently. Even if we do hit a wall at some point, what if it goes vertical for months? And they are the things that I'm, considering, trying to keep an open mind and allow the charts to do their thing. So if we look at the ASX 200, and you can see that we really have gone nowhere for a decade. It's been a bit of a lost decade since the 07 crash, hasn't it? It's crept back. We're trying to rally through the highs from a few years ago. And, often corrections last a few years before. People will know that sort of window 24 idea I was talking about. When you look at these corrections, how long they last, it's a few years before you get a nice trend take shape. And so for the moment, it is breaking out. The long-term trend has turned up. I'm always aware of the false break, right? So I'm, always wary. But again, you have to wait for that to occur. You can't just guess that that's what's going to happen. I'm definitely aware it could happen. But right now, giving this the benefit of the doubt, is it going to finally take off and pull away from this decade of going nowhere? I think there's a strong case for that. Why aren't we at the start of one of these? If AI is going to really feed through the economy and lift profit margins across the board, and economies, inflation under control, and rates start falling, and you've got everything firing. The conditions are right. In the small cap space, finally, probably hasn't given me the right one. Oh, yes, it does. There we go. The small ordinaries, which is stocks, 700 mil and above, long-term trend shift, it's broken above the previous high there. So again, giving it the benefit of the doubt for the moment that it would be ready to take off. If we look at that whole rally from the 2020 crash, big strong rally, back to the point of control, lots of work done for a few years, and maybe it can hold in there. Long-term trend, allow it to go. Look, there's always a risk in that sell zone area, but as long as that long-term trend is in place, we could be in for a nice recovery in the small cap sector, although the micro cap sector is just on the edge of coming back to life. And this, I guess, is the final part of the market to recover. There's been a lot of pain out there in that microcap space. I certainly know, running a microcap service, how tough it's been. And still down 20, 25 odd percent from where it was a few years ago, but finding support, monthly buy pivot, long-term trend shift potentially coming. And a lot of talk about that smaller cap area of the market being the one that will recover well if things take off. So there's reason to be a bit more sort of bullish and going with the charts here and allowing things to take shape. But in the back of your mind, yes, that macroeconomic picture of rates where they are, does inflation pick up? Watch Nvidia, does that crash back to earth? And are things getting a bit ahead of themselves right now? That really is something to have in the back of your mind. That is probably what I think should be going on if this huge paradigm shift actually isn't taking shape. So that's why it's been a tough market to analyze when you've got stocks just flying higher like they have been. But looking at gold to finish off with, there's a sector that is certainly looking bullish. So looking at gold, again, if you've been watching it long term, my view has been that we've been in this long-term correction for years. So you can see there, big run over the last, into 2019 or whatever it was. And for the last few years after that correction, it's been the story of oscillating around that point of control, which is around 1870 or something in gold. And, I set things up once that oscillation starts. I'm looking at the sell zones and the buy zones of those areas, and also sort of expecting false breaks where people get taken out of positions. And, really based on that, that was the best time to be getting long, was when you had the false break of the low of that correction. That's where you get a big clear out that turned back up. And I did actually mention that at the time, and heads back to the point of control. And then we had another oscillation, rally, failure, back to the point of control. And the long-term trend had turned up. So once we got that retest of the long-term trends and the point of control and turned up again, like, well, this is really a solid signal saying this long-term trend could actually be taking shape. And as long as it kept marching higher, I've been saying, getting more bullish and willing to go with it, but always at the top of a range, I'm always wary, wary of the false break and then failure back to the point of control. That's just how markets behave. It's what stuffs traders up, quite frankly. But on this occasion, the setup is there for this to carry on, and I'm definitely giving it the benefit of the doubt for the moment. If it can get, through this 2150, that old high from a few months ago, I'd just really like to see this trend taking shape now, and for a pretty quick move. Next resistance would be around 2300, and that could happen over the next few weeks. It really could. Always, risky at the top of the range, making calls. I know that. I told you about it back there. That is the real trader's entry point. But up through here, I think the market is a bit caught napping and doesn't really realise how sharp and how far gold could go after years of correcting. It's like shaking up that Coke bottle. It can really blast off when it does finally get going. So I always have a get out of jail card on these things, and just based on the setup, I'd really need a monthly sell pivot from here, and I would change my tune. That would have been back under sort of 1970, because that was the old high. But now we've got a new high this month, so it might be even higher. The low of this month is around, what's that? 2040. So depending on how this month finishes up, if it holds and goes further, it would really need a monthly close below there. And then you'd be a bit wary of the potential for a move back to that point of control, you see. So it's basically saying, benefit of the doubt here, let this breakout occur, and you should be positioned for it to potentially surprise to the upside. And I say 2300 is the initial target where resistance could be, but also think about a move like this, where we've got a rally, correction, rally, correction, rally. So who knows? So that's my view. I've had a bit of a plunge on a few more gold stocks in one of my services, and looking for opportunities in the other as well, just to see, can this actually finally break out after years? All right, I think that's enough. I've chatted for far too long. I'll come back with more next week.